Joined by Casey Boland of Hangold Capital Management, and we were talking yesterday, Casey, about the jobs report, and the numbers were certainly weak there. But the jobs report doesn't always correlate that well with the direction of the economy, correct?
That's right. I think there are other metrics that you can look at to get a better sense of that. And one that is a bit concerning is you keep hearing this in the media of an earnings recession. You know, a recession is determined of, the unofficial one actually is 2 quarters of negative growth. And when we have an earnings recession, it really means that we've got 2 consecutive quarters of earnings decline with the S&P 500 earnings. And with this definition, if we go back to the third quarter of 2015, we're now in the third consecutive quarter of year-over-year earnings declines.
All right, so to what degree do we actually worry about that?
Well, I think it's concerning, but you have to dig into the numbers a little bit and understand a little bit more, because when you dig into it, you'll see that the weakness right now is really coming from energy, material sectors, which are minor parts of the market on both an absolute basis and in history, and financial and consumer sectors. This is only the first quarter of declining year-over-year earnings, and the remaining 6 sectors are still showing earnings per share growth.
So we have, earnings recessions quite often.
We do. So when you go back to the 1950s, you'll find that there have been 12 earnings recessions. Now, here's a stat you won't like, is only 3 of them did not accompany an actual recession. You go back to 1985-86, for example, at that point in time, that was caused by a sudden drop in oil prices. Sound familiar?
Right.
It occurred in the midst of a period of economic expansion, which we have been having. So while many point to the jobs report as an indicator of potential recession, I think it's better to look at earnings of companies. The trend is not good right now, but we need to continue to look to see if we see decline in other areas. If that bleeds in other sectors, stay tuned.